Our next presenter is Dmitry Suschov from Eurasia Mining. He's non-executive director.
Good morning, ladies and gentlemen. My name is Dmitry. I'm, as a brief introduction, investor in the mining segment, and I've been investing, taking to production several mining projects and selling them to strategic investors like Morugapa Group with the silica sand mine and silicon carbide production, like most recently the met coal, quite a big producer of metallurgical coal on a global scale. And currently I'm 100% focused on Eurasia as its largest shareholder and also the director of the company. So why I think Eurasia is worthwhile looking at is because I am myself as investor and largest shareholder very excited and enthusiastic about the company because first of all, it's already in production. Since last year, it went into full-scale production after a couple of years of pilot production. And then the main metal is palladium. So that's why the topic is the palladium-driven company, which is our main metal, and it's in the structural deficit for the last 6 years. And also the stock of the product has been deteriorating. So palladium has been performing quite well as a metal. If you look at its price, it's currently higher than gold. And then it's an established producer, so it's already in production. Mining, as I learned over the years as investor, is not a short track. It's a marathon. So it was a long story. Eurasia started this joint venture with Anglo-American in the year of 2000, and in 2016 we went to production. So it's long term, and now it's the turning point, the tipping point of the company development when we already profitable from last year, and we have 2 mines, one in production, which is second largest on a global scale alluvial PGM, and going to be number 1 this year, and Monchi Tundra, which is bedrock PGM mine, primarily palladium, 50% palladium mine, and it's heading to production now. It's fully financed, and EPC and financing agreements are signed. So to give just a snapshot of the projects, the West Kiltam, as I mentioned, is second largest global alluvial PGM, and alluvial is not typical discovery channel alluvial mine. It's in fact very similar to bedrock. The only difference is that we don't have to blast, so we go straight to excavation, and that basically means that we have lower costs. So the full cost of production is in the range of $300 to $350 per ounce. That's fully sustainable cost, and the same cost we have on our bigger mine, Monchi Tundra, which we're taking to production now as we speak. So it's both very low-cost mines. One is already based on our production metrics, and the other based on our feasibility study. And what we are doing now, what is our focus is on the operating mine, we are scaling up volumes, and we've been doing it already last year very significantly, and this year we carry on doing that and going forward as well. And then we also increasing our resource base. So we recently increased from 20 square kilometers to 90 square kilometers, and we are adding additional reserves and resources to this mine, as well as to our second mine, where we got the production permit end of last year, and currently all the documentation, everything is in place to launch the mine, and we have the final binding EPC contract signed with the Chinese, Sinosteel, and I already had experience working with the Chinese on the coal mine. They did everything on time and budget, so we have experience, and also they fully finance the project. Plus, we have all the infrastructure in place already that significantly reduces our capex, and that's quite important because the infrastructure capex can be killer of quite a number of projects from the economic perspective. So we have the feasibility study in place, we have all the production permit and the EPC with the financing in place, and we are doing already the land preparation, other works on the ground. So it's important to mention that it's not just the quality of assets, but the quality of our team that's important. So we have a very strong team on the ground in Russia on both projects, and also a strong team here in London. So that's one of our key resource, apart, of course, from the quality of assets themselves. So on our bigger mine, on Monchi Tundra, which is palladium project heading to production, we have CapEx fully funded. It's funded via 10-year debt facility at LIBOR plus 3.5%, which is in the current low interest rate environment with LIBOR heading to zero, is very low cost financing. And the NPV on the project is almost 200 million based on Aptiva Securities research. And that was done at a palladium price less than $1,000 per ounce. So currently it's much higher NPV, as you can imagine. So that's our operating mine. It is, in fact, second largest now and heading to be the largest alluvial PGM project on a global scale. It has all the basket of metals, which include palladium, platinum, iridium, and rhodium, as well as some gold. And we are developing there, targeting to develop a number of open pit targets, not just one. We already developed two, Malé Sosnovka and Ключики, and we are going to develop more and to eliminate so-called single asset risk when we're just mining one open pit. So that's how it looks like on a picture, but better maybe to have a look at the video. So as you see, it's very similar to bedrock mining. The only difference is that we don't blast. So we excavate directly and we truck the ore to the enrichment facilities. So that's then we have the loaders loading the ore into enrichment, and there's a certain process which is involved there to arrive to the final product. So the final product is high-grade concentrate, which is over 70% grade concentrate, and we are, in fact, increasing the metal extraction now, and 70% grade concentrate is almost metal, and we sell directly to refineries. So to summarize, basically, there's not many palladium companies, pure palladium plays in the market. And if investors want palladium exposure with upside, because with the palladium performance over the last couple of years, it's kind of risky for many investors to invest in the physical palladium, physical product. And if they want an upside, then there are a couple of companies which are not yet consolidated by major players, and that include us and the North American Palladium, which is a Canadian-listed company, which is an underground mine with slightly higher cost than us because we are 100% open pit. And also we just started production, so scaling up, obviously the upside is there. And we're launching the second mine now, which is a much bigger project with 130,000 ounces of palladium equivalent per year, which is significant production. And Sinus Steel, our engineering partner, has an obligation to bring the project to full-scale production to 125,000 palladium equivalent per year, which only when they reach, we have to sign the acceptance act and offload this project finance on our balance sheet from their balance sheet. So they are very much motivated to perform and to put project to the full-scale production. That's why we are in good hands, and having experience with Chinese in the past, we feel pretty secure that they're going to achieve it, and the EBITDA for this project, for the second one, is going to ramp up from 28 million in 2001 to 75 million in 2023. So it's quite a big project in relation to our current market cap, and that's why we are quite excited that it's heading to production finally, and we have the financing in place, which avoids the shareholder dilution, which I am as the largest shareholder and all the other shareholders in Eurasia don't like normally. So that's where we are, and to summarize, what's important about Eurasia is that it's a palladium-driven story. not many others left. Still water mining, North American producer, has been acquired recently by Sibania from Norilsk Nickel. And it's just us in North American Palladium left. And then we have one project in production, which is very unique for junior mining companies that are only a small part of them is reaching the production stage. So we're already there, and industrial scale since last year and profitable and scaling up. And our second project is very high in palladium-platinum ratio, which is also very unique even for palladium-driven projects. So that's where we are. Thank you very much for your attention, and I would be delighted to talk to you somewhere on the sidelines of the conference, so you're welcome to come to stand 22. Thank you very much.